very often someone will ask me about dividend yield, and we do care about dividends, but I think this is a really important detail. The highest dividend yield usually sits on a stock for a company in trouble. The reason a stock pays a 6 or 7 or 8% dividend is because the stock is that depressed and the business may not be able to sustain that dividend. The focus that you'll often hear us reference instead is dividend growth. We own companies, and I could rattle off 10 of them, who have 30, 40, 50, in the case of Emerson, more than 60 years of dividend increases. So that's more than 6 decades where Emerson Electric has raised its dividend every single year. Now, management teams don't get a benefit out of raising the dividend. The company still pays tax on the dividend they pay out. So there's not a natural incentive for them to do this other than the shareholder. And so if you can find a company through 6 decades of recessions, inflation, stagflation, deflation, who've raised their dividend every year, that's a steady business. So rather than going and looking for the highest dividend yield stock, we look for companies with a history of increasing their dividend, because to us, that's being shareholder friendly. And that's ultimately what we're seeking, are management teams whose interests are aligned with ours and who behave that way, where they buy back stock when it's cheap, they pay us a dividend, and they keep the business growing.